Welcome to Thackray's Market Update, June 2014. A lot of analysts have been calling for the market to peak around this time of the year. The media has been writing about the sell in May and go away phenomenon. A lot of analysts are looking at some of their indicators, whether it's the VIX or the small cap performance relative to the large cap performance, the call put ratio, or the high yield bond performance. A lot of these indicators are in fact pointing to a very speculative and frothy market. But nobody gets to ring the bell at the top. Some people will go back and claim that they did. Seasonal investing is not about trying to pick the exact day when the market peaks. It's about looking at historical trends when the market tends to be weaker or stronger and taking advantage of those trends. We know that from May to October are the weaker 6 months of the year. Yes, there's going to be pockets where the market is going to go up. In fact, there's some seasonal strategies you can take advantage of in this time period. But overall, this tends to be the weaker time in the marketplace, and investors need to be adjusting accordingly. So let's take a look and see where we stand right now with the S&P 500. The S&P 500 battled around the 1850 line for quite some time. I've talked about that in previous videos. We saw recently here, the last couple of months, we saw that S&P 500 bouncing off that 50-day moving average, and more recently breaking S&P 500 broke above the 1900 level, which is actually a bullish signal. I can't tell you when you're at all-time record highs. I can't tell you how far the S&P 500 is going to go up. But once again, we are in this time period where the market does have these corrections that take place. And what we could see is this actually pull back down, cross that back down below 1900. And it wouldn't be surprising, even in the shorter term, to see a challenge back down to the 1850 level. Now, this is actually fairly good support, because we are battling around that 1850 level for quite some time. Now, in the short term, June tends to be one of the weaker months of the year. But there is another trading opportunity towards the end of this month. Just like in May, the trading opportunity towards the end of May is a Memorial Day trade. The market tends to go up around Memorial Day. In fact, the S&P 500 performed strongly at that time. Once again, there's another short-term opportunity for more nimble traders towards the end of June. As we approach the Independence Day, the market tends to go up around Independence Day, and in fact, it tends to go up into about the 18th calendar day of July. I've developed a strategy called the 18 calendar day earnings month effect. And what it is that the stock market tends to rise into the earnings season until the earnings start to get underway. And the reason why this takes place is investors like to take advantage of that possibility that earnings are going to be stronger than expected and drive the stock market higher. So there tends to be an optimistic viewpoint. And in January, April, July, and October, all of these months tend to perform well in the first 18 days. In July, from 1950 to 2012, what we saw was the average gain in this time period in July was 0.8%. And it's been positive 63% of the time. Last year, the performance was very strong. We saw a big correction that took place in June, and then we saw the market ramp up at the end of June, and then into the first 18 days into July. The performance was 5.2% for the S&P 500 in the first 18 calendar days of July. I'm not saying that's going to happen again, but it is a shorter-term trend that some of the more nimble traders might want to take advantage of. Aside from that, investors need to be aware that this is the time period to be cautious in the markets, whether it's raising cash, lowering beta, buying some of the defensive sectors that tend to perform well at this time of year, or choosing some of the other sectors of the market that also tend to do well, even some non-defensive sectors. So there's lots of opportunity in the summer months to be taken advantage of, including this month and the next month coming up into July. Investors need to be looking at this from a seasonal perspective and saying, how do I shift my portfolio to take advantage of these trends and protect myself in case there is a pullback in the marketplace? In my sector video, I'm going to talk about a couple seasonal trends that exist right now that we can take advantage of. And in the next month, I'm going to do exactly the same thing. Thank you for joining me today, and I look forward to you joining me on the first Friday of next month. Thank you very much.